Welcome to Illuminati Silver. We tell you the truth about silver. Today is Sunday, the 26th of December 2021, and we hope you had a great Christmas day yesterday and are continuing to enjoy the festivities. Today we're publishing our Gold and Silver Weekly Update for the week ending the 24th of December. This is the same content as the video we published yesterday, but just under a different title and thumbnail. So if you listened to yesterday's video, there is no need to listen to this one. But if you haven't, then please enjoy. Gold rose $10 last week, rising from $1,798 to $1,808, having hit a high of $1,812 and a low of $1,785. A rise of 0.5%. In sterling terms, gold finished the week at £1,351. That's down £8. And in euros, it closed at €1,596. That's down €4. Silver rose 62 cents, rising from $22.38 to $23, having hit a high of $23.07 and a low of $22.20, a rise of 0.6%. In sterling terms, silver closed at £17.18, up 26 pence on the week. And in euros, it closed at 20.28 euros. That's up 0.35 euros. The gold to silver ratio fell from 80.3 to 1 to 78.6 to 1. Bitcoin over the past week has risen $3,862 and currently stands at $50,750. Looking at equities, we can see the Dow Jones closed on Friday at 35,950, up 196 points on the day and up 585 points on the week. The S&P 500 closed at 4,752, up 29 points on the day and up 132 points on the week. The Nasdaq Composite closed at 15,653, up 131 points on the day and up 484 points on the week. This has meant that so far this year, the Dow is up overall 19%, the S&P is up 27%, and the Nasdaq is up 22%. Looking at oils, Brent crude closed at $76.14. That's up $2.62 on the week. And WTI crude closed at $73.79, and that's up $2.93 on the week. The dollar index stands at 96.01, so holding above that crucial 96 level, and that's down 0.55 on the week. Now, we concluded last week's video with the following forecast. Quote, we see gold trading between 1725 and 1825, with 1700 and 1850 as outliers, and silver trading between 21.50 to 23.25, with 21 to 23.75 as outliers. Now, in fairness, we expected silver to go a little bit lower than it actually did, although both gold and silver have traded within our normal trading range. But we thought there would be a little bit more downside, but the weakening of the dollar ensured that both gold and silver were shored up somewhat. Having said that, the difference between gold's high and low was just $27, and the difference between silver's high and low was 87 cents. Now, we have to bear in mind that during this period, volumes are relatively low, as many dealers have been taking an early break or squaring off positions, which will continue into next week as we have both options and futures expiring on the 27th and 28th of December, at which time new positions for 2022 may then be taken. Now, we're going to keep today's video short because it's Christmas Day, and so with this in mind, let's jump straight to what economic data is being published this coming week. On Monday, there's nothing scheduled. Tuesday, the S&P Case-Shiller US Home Price Index for October. Wednesday, Trading Goods Advance Report for November and pending home sales. Thursday, we have the traditional weekly jobless claims, and we have the Chicago PMI for December. And on Friday, we have nothing scheduled. It's a New Year's holiday. So we cannot expect much action based on economic data. Therefore, most attention will be directed towards options and futures expiries, reports on Omicron, and any geopolitical news that may happen during this holiday period. We are expecting announcements from the UK government and others just shortly after Christmas concerning any further tightenings, i.e. lockdowns, if this is to happen. Now, until traders return in the new year, we may actually see gold and silver strengthen a little further. But we have to be mindful that the economy is improving, albeit slowly, and inflation is continuing to rise, albeit rapidly. As we saw on Thursday, we had the PCE inflation year-over-year figures, which showed a rise from 5.1% to 5.7%, which means that the Fed's tapering is likely to continue, which projects us to the path of rising interest rates for 2022, which could indeed prove harmful for gold and silver simply because of the strengthening of the US dollar. Now, silver did well this past week, a little better than we thought, within our predictive range, but stronger than we anticipated. And based on previous years, may now continue to rise until the end of the year. Again, the dollar value will be the strongest determinant, together with how badly or less badly the global economy is hurt by Omicron, simply because of its impact on the industrial demand for silver. The last 2 weeks of Christmas, because of holidays, are frankly not truly determinable as to what will happen in the following year, simply because of light trading. What we have tended to see is that silver does well in this period historically and into the first week of the new year. On occasion, throughout January and then sort of peaking in February. But generally speaking, at least up to the first week of January, it tends to strengthen. Now that said, we certainly will not be buying any silver at the present time. So where do we see prices going? Well, we still see gold trading towards the upper end here, but between 1775 and 1835, with 1750 to 1850 as outliers. And silver, well, we see it more or less trading between 22.50 and 23.50, with 22 to 24 $24.25 as outliers. It may get a little bit of a spike, though we did predict that we really expected silver to hover around the $22 to $23 level. Now tomorrow, that is Sunday, we'll be reproducing this video just under a different thumbnail and description. Other than that, we ask you please to share your thoughts, to thank you for listening throughout the year. If you haven't done so, please kindly subscribe to our channel, not forgetting to press the bell sign, so of course you're notified of our videos as and when they're published. And once again, we sincerely hope that you have a safe, enjoyable, festive Christmas break. Illuminati silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.